Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, guys, so we're going to get into the charts, but before we do, let's talk about the news. So we had two big pieces of news come out, specifically the retail sales month over month, and then the U.S. initial jobless claims. So we actually beat on the initial jobless claims. We actually had less jobless reports, so that was actually pretty nice to see. I did think that we would actually exceed forecast, or at least hit the forecast, so we actually did pretty well. But again, this is also in line with the season. It's more common to have more people working during the holiday season than not. But I do feel from the numbers I have seen that this holiday season has been weaker, so I was expecting for the jobless claims to actually hit forecast or actually be higher. But I'm happy to see I was wrong and that we did come in a bit lower. So we reported actual 211,000 jobless claims rather than the 232,000 that was forecasted. And the retail sales actually did hit my expectations. I was expecting this to come in worse than forecast, and it did, and by quite a bit. It was forecasted to be 0.2%, negative 0.2%, and it actually came in down negative 0.6%. And that's not surprising, especially if you're in the U.S. and you're shopping. You're seeing there's a lot less activity on that side of the economy. So not surprising to see. This didn't really do much to the markets, at least at the time, but it did fuel that, hey, economy is weak. The jobless claims does not make the markets feel good that we got more people working, because it just vindicates the Fed's thinking and that they should keep raising rates. So if you're in the markets and you want risk on assets to rise, you actually want there to be less people working. I know how counterintuitive that sounds, but that's the truth, because that's what the Fed is using as one of their markers into justifying continuing to raise rates. So that's kind of the nip and tuck, the fight between the investors and traders to the rest of the open economy, right? So eventually the Fed will pivot. They're already showing signs, even though this last FOMC report and their statement and their talk wasn't that dovish. It was a little bit more hawkish. They're going to be forced to start pivoting as inflation continues to run rampant. All right, now let us get into the chart. So starting off with the dollar. Dollar starting that upside move I've been looking for quite some time. And now we want to watch for continuation, okay? Now, we are still in this blue zone here between 104.88 and 102.71. And I do think that now that we've come down sufficiently that we're going to rise up, challenge these fair value gaps up here again, and take out the liquidity that's pulled above this small swing high. And then probably see continuation towards the upper blue zone here, and potentially even this descending trend line and the low end of this fair value gap right here. And the reason why I'm still adamant on this, even though we've exceeded this low pivot, okay? And most of the time, if you read a standard TA book, they would tell you, well, the head and shoulder structure is now invalidated because this, which would be the neckline, is no longer equal to here because we've had the closures under here. And I would agree. However, the truth is, reality is never that clean that you would find in a book. A lot of times you'll find a lot of these structures, a lot of these patterns will be a little disjointed, a little janky, and that could happen for a bunch of reasons. Sometimes the markets are less liquid at certain levels and it causes overshoots or undershoots, and sometimes you're having actual deceitful tactics being played to confuse experienced and novice traders alike. So you got to keep that in mind. Now, I'm theorizing off of the evidence I have that we potentially are going to rise up and make that right shoulder. So if you've been following my recaps, and I've been calling for a larger bearish structure on the dollar. So short-term upside to make a right shoulder for a very large head and shoulder structure after this very significant rise since pretty much 2021. Okay, so that's what I'm calling to see happen. Now, we did lose this level, so it does invalidate this as the neckline on a technical level. But we did hold this pivot here, okay? So if we're going to include maybe this whole upswing here, this whole structure as a potential right shoulder, we can do that by just using this as the neckline. Now, in my opinion, I don't think we've exceeded this level that much to the point where it would completely invalidate this. You could still use this as a potential neckline level, this level being 104.636. But if you want to get very technical, you can use this level here at 103.763 if we're going to get this bearish larger structure put in place. If not, then this is just going to be a retracement into a major level and look for a higher low to be made. But the higher low is going to potentially lead to a larger bullish consolidation from this high. So instead of what you're seeing here, this head and shoulder structure, you're going to get something akin to this. You'll come up, fill out these fair value gaps, grab the liquidity above these levels, fail here, and begin a retracement, a bullish retracement or a bullish consolidation from here, and you're changing character from this consolidation to then continue higher. Okay, so we don't want to see this. If you want to see risk on assets rise, into the close of this year and then also Q1 of next year. Okay, so you want to see that head and shoulder structure form that I've been, theorizing to happen. If you want to have a nice bullish half of next year. Okay, I do think as we get closer towards the end of 2023, we're going to look a lot more bearish. But I do think there's a big potential here for a massive bear market rally. At least in the risk on assets. Okay, now let's get on to the Dow. So Dow came up towards this fair value gap, failed off of it, and now we're having that continuation down, filled out this bullish fair value gap as expected, and now should follow my doodle as you're seeing here, these scribbles, back down towards the descending trend line, the breakout level, and potentially start stabbing into these fair value gaps here. Okay, so we want to see this happen because it's a bullish retracement to make a higher low from this low, and then potentially even make a inverse head and shoulder structure here. Okay, all right, so this is what we want to see. This is looking pretty bullish overall if we can play out this way. Obviously, if we don't hold these levels, then look for this low swing down here to hold. I mean, if it doesn't hold, then obviously we're talking about continuation all the way to the downside, and the next level we would want to watch out for to be taken out are these low wicks down here, these swing lows right down here, pretty much under 30K, going towards 28,000 to 27,000. Okay, all right, next is the S&P 500. Falling further into this bullish fair value gap, and we should see continuation, especially if the dollar is going to continue higher as I see it, then we should see continuation to fill out this fair value gap, and then eventually we should look to take out these lows right here. So as low as 37,019, so sorry, 3,719 is what we want to see get taken out. And I'm sorry, gosh, I'm everywhere right now. 3,696, my apologies, is what we want to see get taken out. And then from there, we're going to be looking for any bullish candle structure, so bullish engulfing or bullish doji, to start giving us signs of a higher low from this level down here to start forming, and then look for that continuation to the upside to start challenging these higher swings on the S&P chart. Okay, next is the NASDAQ. So let's take a look at what's going on with the NASDAQ. So this is retraced right back into the fair value gap, and look, it's tapping the descending channel's top line here, right? So we've come back to it. Now, this is going to be very interesting to watch with the NASDAQ. I do think the NASDAQ has the potential to overshoot the downside, okay, because of how the Dow and S&P look. The NASDAQ has been a laggard to the upside compared to those two, and it's been overshooting to the downside. So watch for this to have way more dramatic drops compared to those two, just on a percentage wise. And I can see definitely us coming back under 11,000 and potentially testing pretty much the lows down here. Okay, so watch for the NASDAQ to continue to hold off. Now, ideally, we see this actually grind lower rather than just trend down, but the trending down is more likely. We will eventually break back into this descending channel. I still think we are destined to go up higher as the dollar potentially, does what we think plays out the pathway we're creating and makes a right shoulder. As that potential big structure plays out, we'll see the NASDAQ make it back towards this higher green zone up here, back towards 12,500. All right, now let's get on to oil. Oil having a nice rest day after its pretty nice 3-candle surge up here, coming into this bearish fair value gap. Just missed tapping into it, but just got towards the very low end of that zone there. And so far, you know, I consider this to be the beginning of a nice little consolidation that's going to form. So we're either going to get a bullish consolidation that's kind of going to grind on top of 75, or we're going to see a bit of a retrace back into this bullish fair value gap that was formed right here. Okay, so watch for this bullish fair value gap to be tested, and if this can get held, you know, on the daily, so we see continuation coming down, then you'll probably see a higher low structure here from here. Okay, and then look for this to go up higher and get all the way back. In my opinion, it's probably going to come all the way back towards 85, eventually 95, and then eventually $100. All right, and next is gold and silver. Gold and silver. Gold's beginning the retracement as expected. I believe it overshot just a bit, took out the liquidity above this swing high up here, and just going to follow my doodle now, probably all the way back down towards these fair value gaps, ideally towards this medium one, holds it and makes that larger inverse head and shoulder structure for massive continuation to the upside to take out this fair value gap. So nothing's really changed on the pathway that we see here on gold. I'm very, very bullish on gold, but I'm looking for a very nice retracement back down towards 1725 and then 1700 and potentially all the way back down towards 1680-ish. All right, next is silver. So silver, same thing. Look at this. Perfect. Hits the fair value gap. I warned about this zone. Immediately gets slapped down. And now we should see continuation to the downside. Now we may get a couple candles sort of like this if we're going to have a bit of a slowdown on the selling, but watch for continuation down. This is extremely probable to see continuation down and for this high to hold for some time going forward. Now I do see us coming all the way down towards $20 and then potentially even sub 20 depending on how quickly or how slowly we fall coming into this ascending trend line. The faster we fall, the lower it can go and still hold this rising trend line structure. Okay, but silver is very likely to continue further down, and again that would make sense if we're seeing strength coming into the dollar in the short term. All right, and also if we're going to have more of a, I would say, conservative drop, nothing too big, then we're going to watch for this trend line on the top side of the expanding structure it was in, which is this microphone structure and this rising wedge structure. We're going to watch for this trend line to potentially hold as support, because remember, it broke out from this, and it's very likely, as most things that break out from levels or structures, to come back and test those structures. In this case, it may want to come back and test the structure as support. So we're going to keep this trend line on the chart as well. All right, now let's get on to Bitcoin. See what's going on with Bitcoin today. So Bitcoin, I kept the doodles on. Let me clean it up. But as you can see, this is what I potentially see happening if we're going to get a larger bearish structure here. But let's take this off for now and see what's actually going on today. So we'll stay focused on today. So essentially, Bitcoin came into, broke through the 17,585 trend line here, which is the low wick of the large consolidation back in June. And, to me, this has the potential of being very bullish, okay? So we have to watch and see how price looks as it comes into this consolidation here. It's getting very, very close. It's already attacking the top wicks, but this could potentially turn into something very, very bullish if we have a retracement that's very controlled. So it comes down towards this level and holds this consolidation again, and then we start showing a bullish bias, via the price action here. You can potentially see much larger structure coming towards the upside. Okay, so this could lead to the continuation to the downside. We have to be very, very careful here, but we want to be patient. Let the price action tell us the story. Right now, it's very likely we're going to come down lower, and we're going to come down back towards sub 17,000, going to 16,500, 16,800 around this zone. So we're going to come back towards this fair value gap, and then we're going to see, are we going to grab the liquidity under this consolidation, and then potentially this low right here, and will this low right here hold? Okay, because if we come down and hold this level here, potentially stab into this level and hold, you're looking at a much larger bottoming structure again. And look, it's very similar to what? to this. So you had the lows down here, and then you had that rounding bottom structure here that did eventually break out, from these highs like this. It did break out, but then failed due to FTX. We could potentially be getting a smaller version of this double bottom structure, which is known as an Adam and Eve bottom. Okay, Adam is a slightly larger, slightly lower, and then Eve is slightly higher. And the same thing can be attributed to the upside. You have Adam and Eve double bottoms, Adam and Eve double tops. You have Adam is a little taller, Eve's a little shorter. It's always like that, okay? So we might be getting that here, but again, we're just mapping out what may be. We don't know. We just know the probabilities right now are very high that we see continuation back towards this fair value gap at the least. We could potentially go even lower, back towards 16,000. Now, if we start losing 16,000, it's going to become extremely hard to hold this low, the lows here at 15,473. So let's actually pop that on the chart. Let's just mark this level here. This level must hold if we're going to have that bottoming structure. If this gets taken out after this rise here, watch for a move all the way back down towards 12,000. Okay? All right, everyone. That is it for this market recap. I hope you enjoyed. If you do enjoy this content, please give me a like, give me a subscribe, maybe a share or two. Definitely leave a comment on whether you agree or disagree with my analysis. I love to hear your opinions. And if you do agree, I don't mind hearing that too, because I love a pat on the back, okay? But if you have any questions, always leave a comment. And also join the Discord if you haven't. That's the best way to get in contact with me. And remember, guys, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.